All right, today we're going to dig into a pretty incredible story of success. We're talking about the environmental services giant, Clean Harbors, and how they managed to pull off an absolutely record-breaking year. So let's just jump right in with the headline number, shall we? For the very first time in its entire history, Clean Harbors blew past $6 billion in annual revenue. I mean, this isn't just a good year. This is a massive, historic milestone for them.
And hey, don't just take my word for it. Their own co-CEO, Eric Gerstenberg, came out and said it wasn't just about revenue. Nope, they also hit record levels of profitability and cash flow. I mean, talk about firing on all cylinders. So the big question is, how'd they pull it off?
Well, the whole story really starts with their biggest division, environmental services. This thing has been the absolute growth engine for the company. So what do these guys actually do? Well, to put it simply, they're the pros you call to handle the really tough stuff, the industrial and hazardous waste that other companies just can't or won't touch. It is an absolutely critical, essential service. But here's what's really incredible: the consistency. Think about this. The environmental services side of the business has delivered 15 straight quarters of year-over-year profit growth. That is almost 4 full years of nonstop improvement. This is the bedrock, the foundation of the company's success.
Okay, but it wasn't all just smooth sailing and easy wins. The company's other big division, Safety-Kleen, was staring down a major challenge with oil prices. But, and this is the good part, they came up with a really clever fix. So here's the deal with Safety-Kleen. Their whole business is collecting and recycling used motor oil. The problem was, their profits were always tied directly to the price of new oil. So you can guess what happened, right? When oil prices would tank, so would their margins. It was a huge, glaring vulnerability in their business. So they came up with this brilliant fix. They thought, hey, instead of living and dying by the price of the final product, what if we just started charging a fee to collect the waste oil in the first place? It sounds so simple, right? But that one change completely flipped their business model on its head, taking it from super volatile to incredibly stable. And did it work? Oh yeah, the results pretty much speak for themselves. In just the fourth quarter, this new model boosted the segment's profitability by a whopping 22% compared to the year before. And get this, that was while oil prices were still falling. The fix didn't just work, it worked brilliantly.
All right, so with the core business firing on all cylinders and the oil problem solved, the story now takes a turn towards the future and a massive opportunity. We're talking about cleaning up PFAS, better known as forever chemicals.
Okay, so what in the world are these forever chemicals? And more importantly, why are they suddenly such a gigantic opportunity for a company like Clean Harbors? Well, PFAS are basically a group of man-made chemicals that are in, well, everything. We're talking nonstick pans, waterproof jackets, even firefighting foam. The problem, as the name suggests, is that they're designed not to break down, ever. They just hang around in the environment and even in our bodies, creating this huge long-term contamination nightmare that, you guessed it, now has to be cleaned up. And when I say the scale of this is staggering, I'm not kidding. Let's just throw some numbers at you. For starters, Clean Harbors just landed a $110 million contract. That's for PFAS water filtration at just one location, Pearl Harbor. But again, that's just one single site. The Pentagon alone has already identified over 700 other military bases that need the exact same kind of cleanup. So what's the company itself forecasting for this? They're projecting 20% growth for their PFAS business in a couple of years. But honestly, when you look at the sheer scale of this problem, a lot of people are saying that number is wildly conservative. The potential upside here could be absolutely enormous. So a record year means record profits, record cash, which leads to the next logical question. What is Clean Harbors doing with all that money to make themselves even stronger? Well, they've laid out a really clear 3-part strategy. First up, acquire. They're spending about $130 million to buy up other businesses and expand their network. Second, invest. They're putting $50 million right back into the company to buy a brand new fleet of vacuum trucks to fuel their own growth. And third, return. They're giving value back to shareholders by buying back a record $250 million of their own stock. Okay, so let's just pull this all together. What's the takeaway here? You've got Clean Harbors with this incredibly strong core business in environmental services that's just a profit-making machine. Then they pull off this brilliant business pivot with Safety-Kleen to solve a huge problem.
And now, on top of all that, they are staring right at what could be a generational opportunity with this massive PFAS cleanup. So it all leaves you with one final, pretty interesting question to think about, right? You've got this rock-solid foundation and this absolutely monumental environmental cleanup job on the horizon. So is it possible that the market is still underestimating just how much growth potential is packed into the clean and clean harbors?